Namaste everyone. Welcome. Today let's take a closer look at a very interesting stock, Bharat Electronics Limited, or BEL as we all know it. As of today, 18th June 2025, the stock is trading around rupees 401.90 on the National Stock Exchange. If you look at its daily chart, one thing becomes crystal clear. BEL is in a very strong uptrend. This means that for the past several months, the price has been consistently moving upwards. It's like climbing a staircase. There are small steps down, but the overall direction is up. This is what we call a bullish trend. And BEL has been a textbook example of this, making many investors very happy indeed. So the big picture is definitely positive. Now, when a stock runs up so fast, we must also be a little bit careful. Think of it like a marathon runner. Even the best runner needs to slow down and catch their breath, right? Similarly, a stock in a powerful uptrend often takes a pause. This pause is called consolidation or a pullback. It's a healthy sign for the stock, allowing it to build a base before its next move up. For BEL, which has seen such a fantastic rally, a short-term consolidation wouldn't be surprising at all. It's the market's way of digesting the recent gains, so while the main trend is strong, we should be prepared for some sideways movement or a small dip in the coming days or weeks. This brings us to the question on every investor's mind: what happens next? The current price of rupees 401.90 is a result of a spectacular journey. The stock has been a star performer, especially in the defense sector, which has been in focus. The strong upward momentum is backed by positive sentiment and strong fundamentals, but as technical analysts, we focus on the price and volume action. The charts are telling us a story of strength, but they are also flashing some signals of caution. Understanding this dual nature, long-term strength versus short-term exhaustion, is the key to making smart investment decisions in a stock like BEL. So in simple terms, BEL is like a high-flying kite. It's soaring beautifully, but the wind might calm down a bit, causing it to dip slightly before it catches the next gust. Our job as investors is not to panic during these small dips, but to understand why they are happening. We need to look at the chart, identify the important levels, and have a plan ready. In the following sections, we will break down the BEL chart piece by piece. We will look at its support and resistance levels, understand what the technical indicators are telling us, and discuss potential trading strategies. Let's get ready to analyze. Let's start by looking at the main trend. Since March 2025, BEL's stock price has been on a one-way street, and that street is heading north. This primary trend is what we call a parabolic rally. Imagine the shape of a curve that gets steeper and steeper. That's exactly what BEL's price chart looks like. This kind of rally happens when buying interest is extremely strong and continuous. Investors are so eager to buy the stock that they are willing to pay higher and higher prices each day. This sustained buying pressure has pushed the stock from lower levels to its current price near rupees 402 in a relatively short period. This powerful move is the most important feature of the BEL chart right now. But as we discussed, no trend moves in a straight line forever. Within this major uptrend, we can see smaller counter movements. These are the periods of consolidation or minor corrections. Recently, after hitting its peak, the price has started to move sideways in a narrow range. This is forming a pattern that looks like a small flag on a tall flagpole. The flagpole is the sharp rally, and the flag is the current consolidation phase. This bullish flag pattern is very common in strong uptrends. It suggests that the stock is just taking a breather before a potential breakout to continue its upward journey. So this short-term pause is not necessarily a sign of weakness, but rather a sign of strength being accumulated. Why does this happen? Well, after a quick and sharp rise, some investors who bought at lower levels decide to book their profits. Their selling creates some supply in the market. At the same time, new buyers who missed the earlier rally are waiting for a small dip to enter. This tussle between the profit takers and the new buyers is what causes the price to move sideways, forming the flag pattern. The trading volume, which is the number of shares traded, usually decreases during this phase. This tells us that the selling is not aggressive. It's more like a quiet resting period for the stock, which is a very constructive sign for the bulls. So, to put it all together, we have a very strong primary uptrend, which is the main story. Within this story, we have a small chapter of consolidation currently unfolding. This consolidation is taking the shape of a bullish flag pattern, which often resolves in the direction of the main trend, that is upwards. Understanding these two trends, the long-term uptrend and the short-term sideways trend, is crucial. It helps us to stay patient and not get scared by small price dips. It allows us to see the bigger picture and plan our strategy accordingly, whether we are looking to enter, hold, or exit the stock. Now let's talk about the most important part for any trader or investor, the key price levels. These are the levels of support and resistance. Think of support as a floor below the current price, where the price is likely to find buying interest and bounce back from. Resistance, on the other hand, is like a ceiling above the current price, where selling pressure might emerge and stop the price from rising further. Identifying these levels is like having a map for our trading journey. For Bell, the immediate support level to watch is around Rs 380. This is the lower end of the recent consolidation range, or the bottom of our flag pattern. If the price breaks below this immediate support of Rs 380, the next major support level is much lower, around Rs 350. Why Rs 350? This level was a previous resistance area that the stock broke through during its recent rally. In technical analysis, we have a very important principle. Old resistance becomes new support. So the level that was once a hurdle for the price to cross can now act as a strong cushion. A fall to this level would represent a more significant pullback. But as long as the price stays above Rs 350, the larger bullish structure would remain intact. It would simply mean the stock is taking a deeper breath before its next move. On the upside, the immediate resistance is the recent all-time high, which is around Rs 415. This is the peak from which the current consolidation started. For the uptrend to resume, the stock needs to break above this level with strong volume. A decisive close above Rs 415 would signal that the flag pattern has resulted in a breakout and that the bulls are back in complete control. This would be a very positive sign and could open the doors for the next leg of the rally. Investors should watch this level very closely, as a breakout could happen quickly and powerfully. Beyond the immediate hurdle of Rs 415, there are no historical resistance levels, as the stock is in uncharted territory, making new all-time highs. In such cases, we use psychological round numbers as potential resistance points. So if Bell breaks out above Rs 415, the next potential targets or hurdles could be at levels like Rs 425, Rs 450, and even Rs 500. These round numbers often act as psychological barriers where some investors might choose to book profits. So, keep these support levels of Rs 380 and Rs 350, and resistance levels of Rs 415 and Rs 450 in your mind. They are your guideposts for navigating Bell's price movements. Let's get a little more technical, but don't worry, we'll keep it simple. Apart from price levels, we also use technical indicators to get more clues about the stock's health. Let's look at three popular ones: the RSI, the MACD, and moving averages. First up is the Relative Strength Index, or RSI. The RSI is a momentum indicator that measures the speed and change of price movements. It moves between 0 and 100. A reading above 70 suggests that the stock is overbought, and a reading below 30 suggests it is oversold. For Bell, the RSI is currently in the overbought zone, above 70. This doesn't mean we should sell immediately, it just means the stock has risen very fast, and it might be due for a pause or a small correction, which aligns perfectly with our flag pattern observation. Next, we have the Moving Average Convergence Divergence, or MACD. This sounds complicated, but it's just two moving averages moving together. It helps us identify trend direction and momentum. On Bell's chart, the MACD line is still above the signal line, which is bullish. However, the gap between the two lines has started to narrow, and the MACD histogram is declining. This is what we call a bearish divergence in its early stages. It suggests that the upward momentum is slowing down. Again, this doesn't signal a trend reversal, but it does hint that the recent powerful rally is losing some of its steam. reinforcing the idea of a short-term consolidation. Finally, let's look at moving averages. These are simply the average price of a stock over a specific period, like 50 days or 200 days. They help us smooth out the price action and see the underlying trend more clearly. Bell's current price is trading well above its key moving averages, like the 20-day and 50-day moving averages. This is a classic sign of a strong uptrend. The 50-day moving average, which is currently around 340 rupees, will act as a very strong dynamic support level. As long as the price stays above this line, the medium-term trend is considered to be safely bullish. Let's also touch upon trading volume. During the sharp rally, which is the flagpole, the trading volumes were very high, which confirmed the strength of the move. But recently, during the consolidation phase, which is the flag, the volumes have been decreasing. This is a very positive sign. It tells us that there isn't heavy selling pressure at these higher levels. It suggests that most investors are holding on to their shares, expecting the price to go up further. If we see a breakout above 415 rupees, accompanied by a big spike in volume, it would be a very strong confirmation of the next rally starting. So with all this analysis, how can we create a simple trading plan? Let's discuss two possible scenarios, a bullish or long setup and a bearish or short setup. Remember, this is for educational purposes only. For the bullish case, we are looking for the uptrend to continue. A good entry point would be on a breakout above the resistance of 415 rupees. A trader could initiate a long position once the price closes decisively above this level on a daily chart. The target for this trade could be the next psychological level, say 450 rupees. To manage risk, a stop loss should be placed just below the breakout level, perhaps around 405 rupees, or more conservatively, below the recent support of 380 rupees. What if the price doesn't break out and starts to fall instead? This brings us to the bearish case. A short trade should only be considered if the stock shows clear signs of weakness. A breakdown below the major support level of 350 rupees would be a significant bearish signal. This would mean that the uptrend structure is broken. A trader could consider a short position below 350 rupees. The target for this trade could be around 320 rupees. The stop loss should be placed just above the breakdown level, say at 360 rupees, to protect against a false breakdown. Trading against such a strong primary trend is risky, so this should be approached with caution. Now, let's talk about time. How long might this consolidation last? The flag pattern in Bell has been forming for about 1 to 2 weeks. Typically, these patterns can last anywhere from a few days to a few weeks. We could expect a resolution, either a breakout above 415 rupees or a breakdown below 380 rupees, within the next 2 to 3 weeks, possibly by early July 2025. A breakout would likely be quick and sharp, while a breakdown might be more gradual. Watching the price action around our key levels during this period is very important. Patience is key. We must wait for the market to give us a clear signal. To summarize, Bell is in a powerful uptrend but is currently in a short-term consolidation phase. Investors should keep a close eye on the support level at 380 rupees and the resistance level at 415 rupees. A breakout above 415, especially with high volume, would signal a continuation of the rally towards 450 rupees. On the other hand, a break below 380 and then 350 would be a sign of weakness. The RSI is overbought and the MACD is showing slowing momentum, which supports the idea of this ongoing pause. The key takeaway is to watch these levels and let the price action guide your decisions. Happy investing!